Hello trade pros. Today Victoria and I took a short day trip to the Toronto beach.
And today we're going to dissect 4 common trading mistakes that new traders make and give you some tips on how to overcome them. A common trading mistake I've noticed amongst new traders is that they come in with kind of unrealistic goals about trading. Like, it is possible to make a lot of money, but you have to keep in mind that just like any other job, you won't be an expert the day you start trading. It takes a while to get to a consistent level of great results. You have to treat trading like an entry-level job. Like, you don't walk into a bank and become the VP in like 2 days or a week. It takes a while, and people come in with kind of unrealistic goals of making 4 figures a day. Again, it is possible, but it takes a lot of time to build up to that level. And my tip to overcome that is do have those unrealistic goals, but kind of push them further back and work towards them. At the beginning, have something a little more realistic, something like an entry-level position, and then you'll see that scaling up towards that ultimate goal is achievable, but it does take a little longer than you'd think it would. Another mistake that I've noticed amongst new traders is that emotions tend to take over a lot when they're in the red and they have lost a few trades in a row. They either tend to move their stops or martingale in a position, hoping that their trade will go back into their direction. Or they take a few losing trades in a row, let's say 1 lotters, and then scale up their next trades to 2, 3, 4, 5 lots to try and break even their whole balance or recuperate all the losses in one trade. This just lets all your emotions run amok and all your analysis go down the drain, and it just turns into a bloodbath. Remember guys, at the beginning it's wise to stick with 1 lots. Even if you lose or win trades, it's a very consistent route to take. And you can scratch trades. If you see a trade's going against you, just get rid of it and look for the next best trade idea. Remember, the analysis is key. That's all you have in trading. Good.
Alright, so one of the mistakes that traders make when they're first starting out is focusing on a big win and having inconsistent days. You might have enormous wins on one day, and then you have an enormous loss to offset it, and your returns are very volatile. The tip that I have for you is to stay consistent. It's all about having regular managed small wins and regular managed small losses. When you focus on consistency, you start to build discipline, you start to build self-confidence, and you're able to scale your returns and trade professionally. It's not about getting rich quickly in this business, it's about figuring out how to be consistent and slowly working your way to the wealth that you want. I made some diagrams for you. This is what traders think is going to happen when they start trading. In just a few months, they're going to become millionaires. And unfortunately, this is what ends up happening. In just as little time, they end up losing all of their money. The goal is this, to be consistent. The goal is to manage trading consistently and eventually work your way up to your account balance. Your account balance will grow if you become a consistent trader. Tip number 2 is stop looking for the perfect trade or the perfect time to enter into it. This shows a lack of confidence in your strategy or yourself as an operator. One of the best tips I have for you here is to look for a trade that looks good, and instead of looking for the perfect trade, be the perfect risk manager instead. That will help you build confidence in yourself and your strategy. All right, trade pros, that's what we got for you today. I hope you enjoyed this video. We'll see you next time around. Comment, like, share, and subscribe. We'll see you in the next video. See you later.